Let's see. I'm having some very, 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 very too many messages. On a meeting. Okay. Yeah, I hope you can see the screen that I tried to share there. If you can see that, yeah, now we can continue. Can you see the screen that I've shared? Okay, that's good. That's good. Let's continue. So yeah, we started early just to make sure that everyone can maybe understand what we skipped, what we didn't, maybe something that we did not really understand. So, but before we continue, this is part of our strategy. This is just the strategy, how we're going to approach the market. So first thing first, you saw maybe in the videos, I repeat mostly the same thing because it's very, very, very important. Mostly when we go on the market, we check the trends, but we don't just go and check the trends. First thing first, we have to have our time frames ready. So we're going to use 4 hours time frame to identify the trend. Sorry. For those who just joined now, let's say Harry and Ndlovu, you should have your notebooks where you write your notes so that you can we so that you can see the progress, because we're also going to do the practicals. So whatever that we're doing here, you should understand what's really happening. So firstly, let me go back. When we approach the market, it's quite straightforward. Remember, the market just pushes up and pushes down, and those are the trends. So we are going to do the same thing. We are going to follow the trends. Our strategy is trend following or trend trading strategy. So first thing first, the best thing that we're supposed to do is to understand the time frames that we're going to use. But on our side and on our strategy, since we are day traders, we're going to start from 4 hours time frame. It doesn't really matter which pair are you checking, but firstly, when you go on the market, we go on 4 hours time frame and something like this. We're going to say, okay, it's 4 hours time frame. What do we do there on 4 hours time frame? We're going to identify the trend. Identify the trend. If we identify the trend, it's obvious that maybe the trend will be going up or down. So it's going to be uptrend or downtrend. Simple as that. So once you identify that trend, the second thing is to do what? Is to draw the resistance line or maybe the support line. If it's an uptrend, if it's a downtrend, we're going to draw a resistance line. If it's an uptrend, we're going to draw a support line. Let me repeat that. Plus, you're going to get this on a video again. So when the market is going down, when you identify the trend on 4 hours time frame, you're going to get that, oh, it's an uptrend or downtrend. So your job is to do what? If the market is downtrending, we're going to draw the resistant line only. You see, and which is on top. So what about the support on a downtrend? It doesn't really matter that much. I will explain that one time soon. So when the market is uptrending, we are going to draw what? The support area, which is on the bottom side. So which means the market, it will be pushing to the upside. Something like that. That is an uptrend. So with that, you're done on a 4 hours time frame. Whatever that you wanted to do on 4 hours time frame, you will be done. But maybe something you won't be done is how to draw the trend line properly. How to draw the trend line properly. So I will be showing you how to draw the trend line properly. So the next thing will be from 4 hours time frame, we going on 1 hour time frame. But we have our reasons why we change this time frame. So remember, the first reason was on 4 hours time frame, we identify the trend and we draw whether the support or resistance line. It will depend if the market is going up or down. So we drawn that. So once we drawn that, our job is to do what? To change the time frame, and we go on 1 hour time frame. So what do we do on 1 hour time frame? So on 1 hour time frame, our job is to do what? Is to identify the structures that we get inside the trend. Remember, already we identified the trend. We identified the trend on 4 hours time frame. So what we want now is to identify the structures that we can get inside the trend. When I say inside, I mean something like this. If we identify this as a downtrend, so whatever that is happening here, it's called inside the trend, because this is our last line, or the roofing line, or the barrier that we have. So anything that is happening below this is called inside this trend. So what are those structures that we're supposed to identify? We have two structures, but I can say it's three. We have two structures. This is 1 hour time frame, remember? So what do? We identify a ranging structure like this. It doesn't really have to be perfect, or a diagonal structure. A diagonal structure can be something like that. So this will be on a downtrend, and this will be on an uptrend. But most likely, we start by identify this ranging or consolidation structure, because it makes our job easy. If you don't really find this type of a ranging structure, it's obvious that the structure might be like this, or maybe like this, if you don't really find the ranging structure. That's why I like to say, let's find the ranging structure. Obviously, if you don't really find it, it means the market is trending in a different way. Like, let's say, for example, let's say here, if maybe you don't really see it here, maybe the market might be moving like that. Do you see that? But I think it's a different story, because here I see something like that. On top, I see something like this. Around here, we see that. I also see something like that. We have this, also that. So it means our structure was actually giving us some ranging structure that I said we're supposed to check. So you might not see them if you don't really know before, or if you never actually go through this, but you have to try to find that. You can start nicely with a straight line and see, okay, I see this point here, I see the other one here, I see the other one. Obviously they make sense. Let's see. Okay, that is a horizontal. Even though we try to push, it still makes sense, obviously. So on top, I see this area, I see this area, I see also this area. If you draw that to me, it's a ranging structure. Remember, on 1 hour. Remember, we identified the trend. So we know that the market is doing what? It's ranging. Simple as that. So our job is to identify that. The aim is to understand how the market is moving, so that we can do what? We can capitalize on this structure. We can't just say it's a downtrend and we don't know where to buy or where to sell. So once we identify this structure, we know that, okay, now the market is ranging and we are inside this trend. It means every time when the market comes back around this resistance, we're going to look for a buy. Sorry, for a sell if it's a downtrend. Something like that. So for those who actually, again, those who started today, remember, I'm trying to go back a little bit. On 4 hours time frame, once you identified the trend, I forgot to mention this. If it's an uptrend, just know that we identify the trend, obviously. If it's an uptrend, just know that we are going to look for a buy only. If it's a downtrend, just know that we're going to look forward for sell only. The reason behind that is we don't want to go against the trend. I want you to listen to that. We don't really want to go against the trend. Why? Because if we don't really go against the trend, sometimes we might get in the market at the wrong time. But since the market is going in the direction that we were going, one way or another, the market will come back in our favor. Let's say maybe you sold here. Let me zoom that again. Let's say maybe you see that, oh, maybe the market it's on a sell. Let's say we have something like this. We identify this, and maybe you decide to sell here because you saw the market going down a little bit. Then once you sell here, then the market starts to do what? To go against you. But you will be lucky because the market won't be going against you the whole day. One way or another, the market will be coming back in your favor. Coming back in your favor. But just imagine if you did the opposite. If maybe you bought. Once the market goes around, once the market goes here, the market will end up not coming back there. Let's see that. If maybe you bought around this area, everywhere, just look where the market reached. You won't survive if you bought. But if you sold anywhere, even if you sold here, then the market still goes against you. The market was still going to come in your favor. But if you bought, it was a different story. You see, that's why we say we don't really want to go against the trend. So at the end of the day, it's like when the market is on a trend, it pushes down or in that trend 90% of the time. If it was going down, it was going down 90% of the time. And against the trend, only 10% of the time. So this is when the market pushes a little bit up, but at the end of the day, the market will be going down. Like here, we see where the market was pushing up, but at the end of the day, the market still pushed lower. So the market still pushed higher, but at the end of the day, we are going down. So which means this small buys, they're only 10%, but the sell, they are on 90% of the time. That's why we can easily see the market pushing lower. Yes, Hubert, you can talk. I see the hand. Harry, you can talk. I think you did mute your microphone. Can you please unmute your microphone? I think Harry did raise the hand. Unmute your microphone because I can't hear you. Okay, I will just continue then. Okay, yeah, you can talk. Can you hear me? Yes.
Yeah, I just wanted to know whether you can hear me because I think I was muted for the whole time. Can you hear me now?
Yes, I can hear you.
Okay, I can also hear you, so I'm listening. You can just continue.
Okay, no problem. Thanks.
Okay, thank you.
Thank you.
Okay.
So yeah, on a 4 hours time frame, just know that if you identified a trend, even if you don't know whether you need to sell or buy, let's say it's a downtrend, as long you can mute your microphone, please. Yeah, thanks. So once you identify the trend on this 4 hours time frame, if it's a downtrend, just know that we are going to look for a sell only. So our job is to do what? Where can we sell? So it's where we go on 1 hour and try to identify the structures that are going, those structures, they're going to help us to do what? To know where we can sell. And we don't even try to buy on a downtrend. On an uptrend, we only look for what? For buy positions only. Why? Because 90% of the time the market will be pushing up. We don't even try to do what? To sell. We're only looking for what? For a buy. Why? This is also advantage because if maybe the market started, let's see, around August, now it's August, now let's say last month, let's say 1st of November, for this 3 month the market was just going down. So it means if you entered anywhere, one way or another, you were going to be in profit before the market breaks out. That's the advantage. Once you identify the trend, that is an advantage because even if though the market can go crazy, at the end of the day, you will end up in profit. So on 1 hour, I just wanted to cover that, sorry. So on 1 hour, we have a very nice structure also. So we have a very nice simple approach. 1 hour, we do what? We are going to identify a ranging structure or maybe this diagonal structure, something like that. So here, as I showed you on 1 hour, we're going to identify the structures. Let me try to draw them as quick as possible. There are videos that I have repeated this. Maybe you can also try watch them again if you don't mind. So don't worry about catching up because once we're done with the teaching, once we're done with trading mindset, trading psychology, we can meet individually just to try to meet everyone halfway so that everyone can be comfortable also. And that maybe can help one or two people who maybe had some issues. So you can see that we had some nice structures of this ranging. Somewhere, somehow, we had smaller diagonals. So I'm not going to count that. You can see here, we also have something. So that's why I'm saying that the structure doesn't really have to be perfect. The structure doesn't really have to be as perfect as maybe as clean as this. But as long as it makes sense, you will understand what I'm talking about. So we can easily see even here on the breakout, we also have something like this. But this was actually a very short one. We had something there. You see that? So this is how mostly the market will be moving. Even though the market came back again and created this structure, but we also have to check this point. This structure that happens, like most likely the market will create something like that. So maybe we can change any pair, maybe we can go on NASDAQ or something else, but all these structures you're going to find them. You can see even here we are having this ranging structure, even though it's not really that perfect, but you can see that we have a support and we have a resistance. So now the market is just playing between this resistance and support. So breakout, then we're going to talk about it, whether we're going to buy or something. So remember, on 1 hour time frame, we have to identify the structures that we get inside those trends. So let me just, as I started with this, I can continue with that. It's fine. So let's go here. So after we identify those structures, our job is to do what? Is to make sure that now we know where we can sell. Where can we sell actually, or look for a sell? When we identify the structures, it's where the market is respecting. This is like a wall. The market every time bounces back there. So it means even though we are going to change the time frame to 15 minutes, we already know where to enter. But we just need to see this very closer. We have to see this close. So if you identified this on 15 minutes or on 1 hour, you already identified the trend. You know that you need to sell, but now your job is to do what? Let's focus on here. We're going to say 15 minutes time frame. 15 minutes time frame. I'm also trying to cover the entry. 15 minutes time frame. They don't want me to check other candlesticks. I'll have to go premium. So it means if you had a sort of a resistance, you will know that, you know what, every time the market touches this area, you used to do what? To bounce back. So let me just do something like this. So here we don't actually create complications of the market structure, candlestick structure. We don't do dragonfly, head and shoulder, whatever. We don't do that. So we just make our job quite straightforward as long as the market respects this area. Why? Because we are already identified this trend. This trend already showed us that we're going down. So now, once the market creates this sort of resistance, we know that, okay, the market respected this area here. Now it's coming back and respect that. Obviously, this makes sense, especially for the second time or the third time. You know that now I'm just waiting for the market to do what? Once it goes away from this area, once it bounces back, once it shows the respect, you can enter below that. So someone can say, Kenzo, how many pips can you wait? What I know is you don't really have to enter on the resistance. Wait for the market to show you the road. Our problem sometimes is to get in front of the market. Instead of following the market, we get in front of the market. That's why even the trend, already the trend shows us that we're going down. Don't get in front because you're gonna make some mistakes. So firstly, here I think it's simpler because I'm not going to enter on this resistance. No, I'm going to wait and see if the market is respecting that. If the market is respecting, we will see it by bouncing back. We will see candlesticks start to go down. So which means I'm just going to say, okay, once the market pushes lower like that, wants to join a call. Okay. So once you see the market is pushing down like that, you will have to do something like that. You can see that now I will wait for the market to reach this area, then I will be in a trade. You can see that the market is moving away from that resistance, which means the market it's respecting this resistance. How do we see when the market is respecting? So let me go on a blank space. If the market is respecting, someone should make pause the mute the microphone. I think it's in Lovo. You can mute your microphone. Okay, I did that for you. So another one can say, Kenzo, how do we know that the market is respecting? If maybe we are, let's say, when this is the simplest thing that I have showed you already. I said let's check this ranging structure on what? On 1 hour. So it means you understand that the market is doing what? It's respecting this level. But how do you know? We see it by bouncing back from the support area, or maybe bouncing back from the resistance area. But we don't just say, just because the market is going down, let's start to buy while it's still going down. No, you will be trying to be in front of the market. What if the market doesn't bounce back and it just continues going lower? You see, so our job is to do what? Is to wait for the market to do what? To do its thing, respect. Once it start to bounce back from this resistance or support, we will see it. Then we're gonna jump on the market, but not exactly on this support. Once the market start to get out there, we jump on the market. So if it pushes up, when it bounces back, we're going to see it again. Then we're going to jump it as a sell. So I'm trying to, yeah. You can talk, Hibet. Harry, you can talk. You can mute your microphone. Harry, I think you were raising the hand. You can talk. Okay. Okay, I think maybe he clicked that by mistake. So, yeah, on 15 minutes is going to be like that, but we're still going to have a full class on the entries. I was just trying to make sure that I complete this time frames from 4 hours. From 4 hours time frame, for those who just joined now, we identify the trend, we draw the trend line, we identify our inner structures, and on 15 minutes we look for that bounce. Then we're going to take a trade. We will see if maybe the market is respecting this area, and below that we're going to buy. So quite similar to here. Maybe if I can say, let's check NASDAQ, maybe. If we're going to talk about N3, yeah, so we have something like this. You can see that if maybe the market, here we were already on a bullish momentum. So if the market, I did not want to talk about breakout. So let's say if maybe the market wants to sell, we were going to do what? Wait for the market to bounce back there. If the market start to go lower, quite similar to here, we were going to get on the market a little bit below, not exactly on this resistance. So which means if maybe it's an entry, it was going to be something like that. We will still talk about the entries. I'm just trying to show you what we do on 15 minutes time frame. You see, so if maybe we're selling, but unfortunately here on NASDAQ it's an uptrend, so which means we're going to do something like that, because on an uptrend, remember, we don't really sell, so we look for buy positions. So every time when we see the market bounces back, we were not going to buy here. We were going to wait for the market to show us that I'm respecting this area. Once it starts to push the upside, we were going to start to do what? To join and continue. So that's why most likely, once we send the signal, we just use buy pending orders. If the market respects, we're going to actually wait for someone wants to join. Okay. So we're going to wait for the market to do what? To bounce back. So that is like the market is showing you that I'm moving away from the support. You see. So if the market is moving away from the support, then we just jump on the market. You see. We just jump on that market. So let me try to get maybe a separate pair. I don't know. What can I get? What can I get? Something straightforward. Oh, I see the other one here. So yeah, here we have a nice breakout, but we're still going to talk about that. So here, remember we had a breakout, but the market was actually going to do what? To push the upside. But what we see here is we can see that we have a ranging structure. So on 15 minutes, which I'm not going to change that, the candlesticks, they're going to be very thin. So it means since we identified this on 1 hour, on 15 minutes, it's just a confirmation. We know where to do what? To buy. Remember, on 4 hours time frame, we already knew that we're supposed to buy. So we just waiting for the market to do what? To show us the structure. If we can able to draw that, we can know that now once the market bounces back there, along the way we have to jump on that trade. Along the way we need to jump on the trade. So we were not going to wait for Flying Star or Morning Star, all these other types of candlesticks. We don't really follow that. We follow this supply and demand, where the market is going to respect. Because only one candlestick might not really mean I don't know. I'm not. It. I don't. To me, it doesn't really. It's just confusing to actually check one candlestick if it's a dragonfly or something. So once the market respects this area, once it starts to bounce back, we're just going to jump on the market. So I saw also on GBP JPY. I forgot to show you that. On GBP JPY, we had a trade. I think it's still in a very nice profit. So the reason behind this was also straightforward. Maybe you can see what's really happening. Before I even tell you, you can see that we are on an uptrend. That's why we're looking for a buy. But once the market respect this area, why didn't we just buy here? We knew that maybe this was we already knew that we were on an uptrend, but we do not really just jump. We wait for the market to show us the road that I'm going up. The problem is when you want to be in front of the market, you just buy early, and then the market start to continue selling, and you will say why the market doesn't respect the support. Every time you buy around the support, the market always breaks. It's not like the market always breaks when you buy. It's because you were very quick, maybe fear of missing out. So wait for the market to show you that I'm respecting, then jump on the market. That's why you can see our pending order is a bit far. Even here, if maybe the market was going to bounce back, we're going to have an entry here, another entry there, and most likely the market will do what will continue. So we don't really fall for any type of a move. Not like we're not going to have maybe any issue, like maybe sometimes the market can do that and reverse. Sometimes that happens, but whatever, even if it happens, most of the time we're still going to eat. We're not going to get that every day, you see, on 15 minutes. So anyways, I tried to cover that quick. Any questions before maybe we go on the other side, where maybe we left off before? Or maybe you guys, you want me to just keep referring to previous courses that we did? Maybe we can go on how to draw the trend lines. Any questions, guys? Let's communicate. Let's communicate. If you have any question, we can do so.
I have a question. I'm sorry, I'm joining a little late.
Yes,
Yeah,
yes, I saw
I
that.
probably missed it. You probably already said you're on the hour time frame now. So when you're looking for your entries, you go to the 15-minute time frame, and you're just waiting for it to bounce.
Yes. Or let me just go back there. Maybe you're not alone. Let me go back there. Let me check maybe a nice pair. Or maybe we can use this one. It's fine. Yeah, we can use 8. It's fine. So remember, I will start from bits of like on the scratch, but I'll be very quick. Once you're done identifying your trend, your resistance, support, and you already you drawn everything, you will move to 1 hour. On 1 hour, we whatever that is inside that trend, we're just going to identify those structures so that we can able to buy or to sell. So, and those structures mostly are, there's a ranging structure, maybe diagonal like that. Mostly this is, you're going to get it on a downtrend, and there's on an uptrend. I hope on this part we are on the same page. Before we continue, on this part we are on the same page. On 1 hour time frame, the structures that we need to identify, are we on the same page? Okay, if maybe we are not on the same page, it's fine. So let me try to identify this structure.
Yes. I'm sorry. Yes.
Okay. So maybe for other guys who maybe are afraid to ask, what I can say is, let me try to identify the structures on different pairs and see if maybe we're gonna get them. So I'll start from here. It doesn't really matter the pair. Let me just clear everything. We are on 1 hour. I just want to show you some few structures that you can get on 1 hour. So this is France 40. So our job is to do what? On 1 hour, remember, is to identify a horizontal structure. Or if it's an uptrend like this, it means we can try to find this diagonal structure. But since this is an uptrend, we are looking forward to whatever that we identify. We just need to do what? To buy. So let's say maybe you identified the trend, it's something like that. It pushes like that already. So first thing first, let's try to identify our horizontal structure. We don't really have to force it. If we don't really see it, it's fine. We move to the next one. So this here we see, I see this point, this point, this point. You don't really have to force them. If they don't really make sense, leave that. It means it's another structure. If I draw here, I think I start to see something. If I draw here, I also see something. But on this one here, it was a different story, which we're going to also focus on that. We're also going to check what's really happening on this structure. So here I also see something maybe quite not horizontal exactly, but sorry, not ranging that much, but it's actually on a very like consolidating or around the same level between the same support and resistance. So on that one, it's fine. So let's identify that. let's identify that. I don't know if I push this is going to make sense. I don't really want to force it, but it seems to be around the same level. But let me not force it. I will use this. So from these areas, I see this ranging, this ranging. So if we move from here and we go on 15 minutes, I will talk about this when we talk about proper entry strategies, because we never talked about that, this type of a structure. So I will avoid it for now. It's quite simple. So when we drawn this already on 1 hour, we need to do what? To go on 15 minutes time frame. Why? On 15 minutes time frame, there is nothing much. It's just to know where the market is bouncing. If we are on an uptrend like this, it means we will be looking for where the market is going to bounce on this support area. But since we withdrawn them, it's going to be way too easier for us. So let's go there on 15 minutes time frame. So let's start from here. If we already drawn this, to me on 15 minutes time frame is because we just want to get early in the market. It's not like maybe on 1 hour is gonna be like way too big. So what we're going to do is, once the market is starting to bounce back from this area, remember we drawn this on 1 hour, so on 15 minutes it still makes sense. So what we're going to do is, we're not going to enter a buy here. We're going to enter a buy once the market shows us that I'm respecting this structure. Once the market starts to bounce back, we're going to take a buy there. The market came back again. We're not going to take a buy here. Some they can take a buy because they're aggressive. They can say, oh, sniper entry. But you're just inviting some unnecessary losses, because we don't know if the market is going to break this or not. So our job is to wait. And once the market starts to push up, mostly we're going to jump on that. That's why most likely I like to advise people to use whether it's buy pending order or sell pending order. So you don't just jump on the market. You wait for the market to respect that area, and it will show you. So it means from this area you were going to enter once the market bounced. So around this level, around this level. And once you jump in, or once the market triggers your entry, most likely the market will start to fly, because it was already on a way of going in that direction. So most likely we're just going to repeat the same thing on other structures. It's just the same thing. But if maybe the structure doesn't really make sense that much, you don't really have to force it. It's where maybe we can say, I'm going to use this, I'm going to use something like that. So if we're going to use that, we're just going to use the normal market structure, where if the market start to move away, let's say if the market start to move away from there, we're going to enter there. Then the market pushes up, we're going to enter there, but on 15 minutes time frame. So once the market pushes up, but it's just the same thing, but in a diagonal form. Before I continue to the next one, you can, if maybe you don't really understand, you can ask. You can ask.
So I have a problem with like I'll get in when I see it's bouncing, and it'll come back against me, and I guess be a false breakout, and then it'll go back in my direction, and I'm out at that point. I'm out the trade, and I've lost. So that has been my problem a lot with knowing when to get in, and when it goes against you, and when to maybe get back in.
Oh, I get that. I get it. So I think the confident, maybe it will come from understanding where the market is going. If on a bigger time frame, if you still remember, if on a 4 hours time frame, you already know that we are on an uptrend. So once you go on 15 minutes or whatever, as long as the market is not really breaking this stronger support area, you are not actually out of the market. Mostly that's why I like to yours, as we're not going to, but we're not going to add that now. Mostly what we're going to do is, as long as the market is around this, is still inside this trend, mostly I will recommend people to hold the trades, because one way or another the market will end up coming back, unless if the market is breaking the outer support or maybe resistance, which we drawn on for our time frame. So let me try to show you that maybe on a different structure. Let me go here. I'm just choosing any pair. So let's say this we were trading this DX, it's German 30 or German 40. So let's say maybe we have this structure. I see a horizontal structure there. So if maybe let's say you entered a sell, let's try to get a sell. Let's say maybe you entered a sell here. I don't know where we can do it, but maybe let's say here. Yeah, let's say there maybe. And the market start to do what? To go against you, and maybe even touching your stop loss, or maybe you panic and you get out. To me, I can say, no, I'm not supposed to get out. Why? Because we are still in the trend. We are still on this trend. The market can still do its thing just to play games. Then once you lost, then the market will continue pushing lower. So the confidence should come from the outer structure. And okay. What? Okay. So can you see the screen? I don't know, something just happened here.
Yes.
Okay. So if the only thing that you should panic with actually is when the market start to get out of our stronger support or resistance. So if not, the market can still play around. Remember, this is inside the trend, and trend can last longer. So somewhere along the way, we also thought maybe, oh, maybe the market is reversing. Maybe we panic, we get out. Later, the market is here. But the question is, did we follow the trend? If you check the trend was still going down. So it means we just panicked. So now when you trade, once you identified your structures, I think there is something wrong with the power. Something's wrong. Sorry, I'm trying to plug my backup. Maybe there was power failure or something. So if we are still inside the trend, you can enter somewhere following the trend and still lose because maybe you were panicking or something. But was the market breaking out of the trend? That is the first question. So if the market wasn't breaking outside the trend, yes, you can extend your stop loss as much as you can, as long as you're not over risking. Because sometimes the market will just try to intimidate you. Once you're out, then the market still continue with the trend, and most likely the market will respect our trend, which lasts very long. You see, so the question will be, when the market was going against you and again came back and followed that trend, the question is, was the market breaking out of the outer support or resistance, or maybe your inner structures? Because this inner structure, it's a counter trend lines, or let's say inner structures, the market can break them any time. They just help us to continue selling or buying, but that doesn't really mean that they are too stronger. The one which was stronger, is the one that we drawn on 4 hours time frame. So it means you can just enter here. The market can go against you, whatever. But as long as the market is not getting out of the trend, it means you can stay longer in the game. You can stay in the game. Just imagine, maybe you sold here, for example. You sold here, then just look what happened. The market still goes against you. Once you close, the market start to try to go lower, and in few days the market is like deep in profit, or maybe already out. But why didn't you make maybe some profit? It's because maybe you panicked, or maybe you did not really follow the trend, because the trend already showed you that I'm going down, unless if the market breaks out. If the market doesn't really breaks out, why do you panic? Maybe you over risked, which we're going to talk about risk management. So the reason we identify the trend is because if we stay in the trend, we don't really panic or something, because we know that this trend can last a few months, 6 months, 12 months, something like that. It might go against me, which is not really good. It's painful, I know, but maybe one way or another the market will end up coming back in my favor, unless that day comes where the market breaks out. That one is where we can say, you know what, now I'm totally out. You see, because it said to close the trade on the negative. Few minutes later or few hours later, we are back on the same trend. You're still selling again. The last position that you lost, you were selling. You're opening the second one, still selling. It doesn't really make sense, because on the previous trades you lost, but you still see the same structure. You still see the market going down, but maybe on the second one you still make money. It shows that the first loss was not really necessary. Maybe you entered at the wrong time, maybe where the market was supposed to reverse. Then the market scared you, then continued to push lower. So most of the time it's maybe we get early in the market. Yes, the market might be on a downtrend or whatever, but if you get at the wrong time, you sell here, the market will just go against you maybe for the whole day or 2 days. But still, your direction was not really wrong, but you just entered at the wrong time. That's why you enter, the market just goes against you. Once you lost, 2 days later or a few hours later, the market is back even deeper in the profit. Unfortunately, maybe you are no longer in the trade. You see, so sometimes we have to understand when is the right time. And our right time, on those structures that I've shown you, if it's a downtrend, around these structures, which is resistant because it's a downtrend, it's where we're supposed to look for sell positions. Here it's a different story. We're not going to take any sell, even though we know we are on a downtrend. So we are going to look for trades around these areas, if maybe the market doesn't really create any structure around our resistant areas. If not, we're going to focus on these inner structures that we can get along the way. I hope that will help. But since we did not really just go straight for the entry strategy, I try to cover some stuff, but we are still going to have a nice class where we're just going to talk about entries. I hope this helped a little bit.
Yes, it helped a lot. I think that is my problem. I just panic when I see it going against me, and I get out on the 15-minute instead of remembering go back to the 1 hour and the 4 hour and make sure I'm still within the trend. It just, I panic and get out and don't want to lose more. So I think that's where I need to work on, just not panicking and just making sure I go back to the 4 hour and 1 hour, and I'm still within the trend. Just relax.
Great, I understand that. So it's like now, let's see. Now we have on Euro USD. This was a previous trend. If you check, it's like since July or August until now, this trend was like very long. So it means if you sold somewhere here and forget, maybe you were going to get into some negative, but at the end of the day, the market was going to go in your favor. So now we have a new trend, which is very fresh. So we might have some entries. I see that it seems like we had a buy pending order and some stuff. We know that this is a down trend or this is an uptrend. You see that? You can see where the entry was. This is a 4 hours time frame, unfortunately. You can see the market did reverse. I know someone lost here, or someone maybe panicked and get out. But the problem is, when we analyzed the market, we knew that this was an uptrend, and the market is supposed to do what? To push the upside. But you might have some losses here just because you panic. Tomorrow, or even today, or maybe let's say next week, the market will be here. And we will still be doing what? Buying, buying, buying. But the question will be, why did we lose on a buy, even though tomorrow we're still buying again, or maybe next week we're still buying? Because the trend is still pushing up. We can't lose if we say this is an uptrend. Actually, we're supposed to make sure that we capitalize on this trend, especially when we can identify it. So here it's where we can say you have to risk it, because once we identify this trend can last maybe 4 months going up. But along the way, yes, there are going to be some sort of reversals, but most likely they're not going to try to break the real support. Maybe the inner structure, the ones that we drawn on 1 hour, those are counter trend lines. The market can try to break them. But 3 minutes later, the market is up. 2 minutes or 2 hours later, the market is up. Guess what? You were able to identify the trend, the time it was breaking out. And the time, 6 months later, you still know where it broke out, but you never took enough advantage of that. That's the problem with people who trade, or let's say us traders. Like where we are now, you can see that. Just imagine if you follow the trend. The market never tried to break this trend. For, let me see, for how long? Since, I think it started since July, but I will start here. Since July until now, November, the market never tried to break this resistance. So imagine if maybe you have the knowledge of trends and you just sold. Whether the market tries to intimidate you, as long as the market is not breaking this resistance, I'm not getting out. But don't over risk so that you can able to hold. One way or another, the market was going to come in your favor. Whether you sold here, the market went against you, the market was still going to go in your favor. As long the market is not breaking our trend. So you were just going to make money. So that's the point of following the trend. So when you follow the trend, the market is in your favor 90% of the time. If you get into negative, it's just going to be maybe 10%. But just imagine if you were following the trend, is it possible to make a loss here? If you were following this resistance, is it possible? Like if we let's say you don't close anything, as long as the market doesn't really break this resistance, it's obvious that you were just going to, even with 0.01 from this area, let's say maybe you bought here, you sold here, up to this point, that was going to be enough by only the trend. Even if you don't know where to enter, by knowing the trend, you were just going to make something. You were maybe going to get out maybe when the market tries to break out. That is free cash. You see, and to draw the trend or to identify the trend is quite easy. So it means once you start to panic, it means you start not to follow other rules that you set to follow. If we say we're following the trend and we only sell, if we do that, 90% of the time we're going to make it. Sometimes, yes, the market can, if maybe let's say another problem is maybe the account is too small, you can't hold longer. That can be another factor for you to close or to lose. But if the account is nice, the lot size you're using a smaller lot size as much as the smallest as much as you can, you're just going to enjoy this. We will just hold maybe for 3-4 days, even a week. You see. But Just because we panic, sometimes you don't actually follow. Sometimes we don't really follow. Let's go on GBP USD. We're gonna get the same thing. Imagine, just imagine, started from July also until 3rd of November. The market never even tried to break this resistance. So just imagine when you sold anywhere. Doesn't matter whether you're getting into negative or something, but look where the market, the lowest area from here to there, how much is that? So you start to realize that sometimes it's not about the entry level or the entry strategy, whatever, because already we know the resistance is not broken. So whatever that we're going to do is just for us to have perfect entries, but already we know that the market is going to go down. Maybe something like that. We know that the market is going to go down. So our job is to just to capitalize on this downtrend. So if you just entered here, I don't see the reason why you should panic as long as the market is not breaking the resistance. So for now, once you have to panic only when you see the market trying to test our resistance or the support. Then you can say, hey, maybe the market wants to break that. Then you can panic. But if the market is not playing around that, I don't see any reason why we don't really make money on the trends beside the entry or something. So here it's another one. This is it was an uptrend from from September 2022 to July this year. Just imagine from sorry guys, I think our time is up.